Hello, I'm Patrick Reams with Commodity Technology Advisory. Welcome back to our latest episode of Conversations with Leaders in CTRM Technology. Today we're very pleased to have with us Mr. Michael Hinton. Michael is Allegro's Chief Customer Officer and SVP of Products and Services. Michael, thanks for being here.
Thank you. Appreciate it.
Absolutely. It's always good to catch up with you. It's been a while, so look forward to the conversation. Speaking of that conversation, let's start by looking at the current technology markets. I mean, it's no surprise to anybody that, or it may have been a surprise, but it's no secret to anybody that commodity prices have pretty much collapsed across the board. In our most recent market sizing report that we just released, we did note that most segments across the board were heavily impacted. One of the exceptions to that has been the utility segments. The U.S. utility segment has been relatively flat to previous years, and we're actually seeing an uptick in the European utility markets, possibly at a lower price point. Is that a similar circumstance to what you're seeing at Allegro?
Yeah, we're definitely seeing similar levels of activity in the market space, with the utilities still being an area of key interest given the fact that the commodity prices have come off. Maybe some differences that we see though is when we look at the North American market, we don't see as many opportunities to do kind of rip and replace of existing CTRM solutions. We see people more in line with budgets to do upgrades of existing systems that may not be as large of projects as we've traditionally done. We go up into the Canadian market, particularly in the Alberta market, where the largest consumers of power up there is basically the oil sands. So a lot of the utilities up in that space are feeling a lot of the pain from the deflated commodity prices. So the North American market has been impacted by it. In the European market, we have seen, like you said, a tremendous amount of growth specific to the utilities, and remains a key area of focus and growth for us, and then also in the Asia Pacific markets as well.
Turning attention to the European markets, as you just mentioned, given all that's going on there with the influx of renewables, the emerging real-time marketplace, the cross-border trading that's starting to emerge, what is Allegro doing specifically to address that marketplace?
Right. Again, you know, as I mentioned, the European market is of key interest, and we've seen a tremendous amount of growth. And even in our roadmaps, we had a number of items that we were looking to address kind of later on that we actually have pulled forward because of the success in that market. Some of the key areas that we're looking at improving are revolving around the natural gas side of things with the utilities, in being able to allow them to have more efficiency in how they're dealing with the hourly markets, managing more smoothly the entry and exit in storage capacity associated with those markets. And then in the power area, given all the new things that are taking place that you mentioned, everything around cross-border trading, which requires cross-border balancing capabilities, enhancing and making that more efficient. And then also the intraday markets have become more volatile. With all of the renewables, it's becoming more and more difficult for them to really balance in the half-hourly markets. So we're adding additional features and functions to make that more efficient, easier for our customers. And then coupled with all of that, obviously, is performance. You know, as the granularity of the market has continued to shrink, just dealing with larger volumes of data, performance becomes a higher priority and focus from a development standpoint for us.
Okay, good. Shifting back to the U.S. markets, and again, specifically the utility markets in the U.S., we are seeing significant changes here. Distributed generation, new modes of storage, the shift from coal to natural gas fuels. What is the most interesting development from Allegro's perspective, whether it's increased interest from the market or just a good technology match? What is Allegro doing to match up to that market, and how do you see that market?
I think a lot of the things that we're doing specifically for the European market match well to the requirements and actually gives us a better product specific to North America, particularly around the distributed generation, again causing that uncertainty in the hourly volumes of how the markets are being impacted. I think some other areas of interest are the ISOs and RTOs as well. Allegro has developed some partnerships with some providers for solutions to basically handle the bidding in awards and creating basically seamless integration to those solutions are some things that are bringing some value to our customers.
Well, good. Let's turn to the other side of the world, Asia Pacific. It was a market with a lot of promise a couple of years ago as China's growth was continuing as it was, but with the recent trouble, I think it's been a more disappointing market than anything for a lot of the vendors in the marketplace, particularly over the last 12 to 18 months. It just hasn't been the consistent success that I think a lot of people thought it would be. How is Allegro doing in that market area?
Well, as you're aware, we had a big investment into that market in a number of areas, and we had some real strong hopes for China, and actually had developed business in China with a large LNG player in that particular market. But like you said, with some of the recent activity, the market itself in China hasn't been doing well. So we were able to pivot and take that investment in the resources and actually apply them into the Japanese market. And as you're aware, the Japanese market has a number of interesting things going on. Them basically backing off on the nuclear facilities caused an increase in growth in gas-fired generation being built, which then created some influx of additional LNG requirements, which now is kind of backing off. But just the uncertainty of that has created opportunities. And then you couple that with the deregulation of the power market and then the natural gas markets following that. So we've had success directly in the Japanese market, and we continue to see additional activity and opportunities associated with that.
Well, it certainly keeps it an interesting market area for you.
Definitely.
So let's close by just taking another look at the market conditions, given the low continuing prices that we see and I think that are currently forecast. In that environment, what do you anticipate your customers will be looking to Allegro for over the next 18 months, 24 months? What's going to be critical to that market?
Well, I think even though that the prices are low, the volatility hasn't disappeared, right? There's still tremendous volatility in those markets. So, you know, our traditional offerings still hold true to our customers, in that providing them the visibility and the understanding of the risk associated with that volatility allows them to make better decisions on how they trade and transact. Also, in the traditional markets, you know, a lot of people have had to trim down and cut costs. And so the need to be able to do things more efficiently and be able to do more with less still resides with those customers, and our solutions bring that value to those customers, which they need.
Well, good. I appreciate it. I think that's all we have time for today, but I appreciate you making the time in your day to sit down and visit with us.
I appreciate it as well. Thank you.
Terrific. So that's it for this episode of Conversations with Leaders in CTRM. Be sure to see the CTRM Center website for additional videos in the future, or our corporate website, comtechadvisory.com. Look forward to seeing you then. Thanks.